I am obviously very bullish. I don't know. And I was talking to Nova about this yesterday. I've got three outcomes in my head that I'm juggling with. The 60% probability is we have kind of a very traditional cycle, and that pushes, Bitcoin up to the 100,000 to 200,000 range. And
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discuss about Bitcoin. According to Raoul Pal, it will truly be more inclusive and wider than people anticipate because of the trade agreement that the ETFs, because, as Raoul Pal believe you are aware, the Bitcoin one is undoubtedly on the horizon, and there's a good probability the E1 will follow. The remarkable thing is that the debt refinancing cycle and the Bitcoin halving cycle are, Raoul Pal believe, drives everything. It's the same thing that happens during an election cycle, so you know if that repeat, after which there should be a bear market year in 2026. Let's see. Raoul Pal definitely very bullish, but Raoul not sure why, and Raoul Pal was after discussing this with Nova yesterday. Raoul weighing three possible outcomes, of which the 60% chance is because of our somewhat conventional cycle. Bitcoin is pushed up to the 100,000, 200,000 range, and you are aware of the positions of all other assets on the risk curve in accordance with that, and lots of things Raoul Pal discuss. So please watch the video to end, and share this video and subscribe our channel Everyday Finance. Thanks.
I've given up giving prices to people because people on the internet, they're just not nice. And so you get, Raoul says this, so-and-so says that, it didn't do that. So I'll phrase it a different way, is we're seeing a much earlier ramp in the cycle than we've seen in the past, which is very interesting. Very rare to be this strong this early in the cycle. Now, we are front-running some of the capital flows, and so there's probably some correction that happens by the rumor sell the fact. But I think if the space continues like this and we start getting monetary easing and the other conditions that tend to jumpstart the business cycle again, then we should see a very strong 2024 and most likely a strong 2025. The business cycles have been almost like clockwork, 2-year up cycles, 1 year peaking, 1 year down. And that corresponds. What's amazing is the Bitcoin halving cycle is the same as the debt refi cycle, which is, I think, what drives everything. It's the same as the election cycle. They're all the same thing. So, if that continues to repeat, then it should go until 2026 when that should be a bear market year. But, let's see. So I am obviously very bullish. I don't know. And I was talking to Nova about this yesterday. I've got three outcomes in my head that I'm juggling with. The 60% probability is we have kind of a very traditional cycle, and that pushes, Bitcoin up to the 100,000 to 200,000 range, and, all the other assets accordingly where they are on the risk curve. There's a 20% chance this early start is signifying something much bigger, which is the larger adoption and the more capital into the space, which leads to larger price rises than people expect, because people are quite scarred because the last cycle seemed shorter than most people expected. Everyone thought there was another final leg higher, and that never really happened. The kind of 100,000 Bitcoin, the laser eyes idea never got there. But maybe this time the shock is for excess returns beyond expectations. The other side that I grapple with as well is, well, maybe the whole cycle's front loaded, and in fact it's shorter but more violent in 2024. So those are the three scenarios that I'm juggling in my head with, but 60% probability is it just does what it says on the tin and repeats what it usually does.
According to Raoul Pal, the institution's willingness to provide the ETF's yield varies. If fewer institutions would rather buy Ethereum since they could then stake it and profit from it yield. Because if you don't provide them yield, BlackRock, the asset manager who introduces the ETF, will get extremely wealthy since they will receive the EETH staking yield and will not be giving it to the ETF holder. They will profit handsomely, and that's been demonstrated quite frequently in ETFs in the past. So Raoul Pal believe that's the reason, is that when Raoul talked to institutions, they understand that it's like placing a wager on technology. It's more comprehensive, and unlike Bitcoin, we receive a return. so we can simply hold on to it. But they are aware of the Bitcoin narrative as well, so they comprehend that two distinct factors are at work here. This is incredibly fascinating. Okay, but you're correct. You were explaining the differences to folks when you were speaking with them. Do most institutional investors? Let's back to Raoul Pal interview.
That's a good question. For retail, it's just price action, and what's likely to happen is the moment the Bitcoin ETF is launched, the market will focus on front-running the ETH ETF. If the previous front-running made money, they'll do it again. So retail will get very interested. And, ETH's a broad, deep ecosystem, and people are happy to get exposure to it. The institutions, it depends whether they give the yield of ETH in the ETF or not. If not, a lot of the institutions would prefer to own ETH itself, because then they can stake it and get yield.
Huh.
Because if you don't give them yield, some asset manager who launches the ETF is going to get rich. BlackRock, they'll make all the money because they'll get the ETH staking yield, and they don't give it to the ETF holder. And we've seen that very commonly in ETFs in the past. So I think that's the thing, because when I speak to institutions, they get ETH because it's just like, here's a bet on technology. It's a broader based thing, and we get a yield, so we can just sit on it, which they don't get with Bitcoin, but they understand the Bitcoin story as well. So they understand there's two different things here at play. I think it's new information, but they will figure this out pretty fast, because the people who are going to add an ETH ETF into their portfolio are reasonably advanced, or they're RIAs because they got retail clients who want it. The people who are much more cautious, but they want crypto exposure, will definitely go for Bitcoin. So I think there's a level of sophistication that means that they would most likely ask the question is, how do I get the yield? I think that's right. That would make sense to me, but it depends, because the markets are pretty quick to arbitrage these things out. So somebody will launch one that gives you half of the yield, and eventually you'll get the whole yield. But, I know asset management firms, they'll try their best to keep that themselves, because it's a very lucrative product. If they can capture 4 or 5% just by launching an ETF, I mean, that's the holy grail for them. So Ethereum is broad, deep, and has no career risk in building on it. So it's the establishment. It's like, if you want to build in this space, that's the easiest place to go. The density of talent, the density of applications, the density of knowledge is immense. So how can you not be bullish on that, right? That's always going to attract people. It's always going to create a rich and vibrant ecosystem. Solana is kind of the new kid on the block, but they've managed to solve one of the problems that ETH was struggling with, which was speed and cost. So two of those they've managed to solve without compromising security. So, okay, that's interesting. So that's why we've seen a lot of people start building on Solana, and we've seen a very, very vibrant ecosystem being built. And so ETH had to solve that with layer 2s, essentially. Well, it doesn't have to happen in Solana. But there's two big system developments in Solana that really means that it has to play catch up in value terms, I think. Doesn't mean it has to be the same size as ETH or bigger than ETH. None of those. It's just, the rate of change of value accrual comes quite quickly. One is the compressed NFTs I talked about before. Nobody's got their head around this yet. People are thinking, I can just print a million monkey JPEGs. It's not about that. It's what else can you use a smart contract for? That's really interesting. Secondly, it's Firedancer, which most people aren't aware of yet. But Firedancer is the validator built by Jump Trading that essentially rebuilds Solana in a different language from the ground up. What they've done is double the security by having these two validators on the network. And in testing, it's had 1 million TPS. So this is of an order of magnitude different. Why does 1 million TPS matter? Because Solana's pretty fast as it is. It's because it matters, and why it's being built by Jump Trading is high-frequency traders use fiber optic cables, and their constraint is the speed of light. And they're like, well, if we want exchanges to go decentralized and be able to cope with the traditional financial markets, you're going to need to get to this speed. That's what this is about. And that opens up a whole bunch of use cases. So I see the vibrancy of the Solana developer network. I also think the UX of Solana overall is just nicer. It's just an easier place to hang out. And so, the applications built on Solana just seem just a little bit easier. And so the comparison, Chris Berniski talks about this as well, it's like Android versus Apple. It's like Solana feels like Apple. It's a closed system, but it's very slick, very good, will create great loyalty. Ethereum is much broader, much more open in terms of other things that can be built on top of it.
So do you expect one of them to become more dominant?
It's too early to tell. I mean, I would remain that ETH remains dominant because, there is always innovation going on in ETH. It's not like it's a dead chain. So I just assume that the amount of smart people in the entire ETH ecosystem will bring breakthrough after breakthrough. But I just think there's a big catch up in valuation terms of the Solana network versus ETH network. Should it be a multi-$100 billion ecosystem? Could it be? Probably. Could ETH be a $1 trillion plus ecosystem? For sure. I'm not sure that the pecking order changes. Well, I'm still a bit partial to the ETH flips Bitcoin pecking order because of the number of use cases and network activity measured in different ways. But who knows? Doesn't really matter.
When Raoul Pal was discussing Ethereum and Bitcoin, Raoul mentioned that they were only meant to be used as a store of valuable concept. But what does it imply when you can use that network for other purposes? That's a really potent idea. Raoul Pal not familiar with Bitcoin yet, but from what Raoul hear, it's a good thing. Raoul Pal also knows several people in the Maxi community claim that this is a horrible use of block space and that it is known as spam. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.